Nationwide Building Society has reported a near doubling of annual profits on the back of buoyant mortgage demand, but it's warned of a possible drop in house prices. The UK's biggest mutual reported a pre-tax profit of £1.6 billion for the year to the 4th of April. That was up from £823 million in the same period a year earlier. But Nationwide warned that higher property prices and interest rates, together with steep increases in the cost of living, meant that housing had become less affordable. It added, "We expect housing market activity to slow and the rate of house price growth to moderate in the coming quarters. There is a risk of downward movement in house prices given the pressure on household budgets." The advertising agency M&C Saatchi has agreed a £310 million takeover by the advertising, marketing and public relations firm Next 15 Communications. Well, the deal comes just 2 days after M&C Saatchi turned down a £254 million offer from Vin Murray, its largest shareholder, who owns a stake of just over 22% in the group. Well, Tim Dyson, the chief executive of Next 15, you might recall he was on the programme recently, said it was an exciting opportunity to bring together two highly complementary businesses, creating a truly global and diversified group. And Wincanton, the supply chain and logistics specialist, said today it is seeing good momentum in its business despite concerns over the economic backdrop. The company, which employs nearly 20,000 people, including more than 5,000 drivers, reported pre-tax profits of £54.8 million for the year to the end of March. That was up 19% on the previous 12 months. Well, the company said it had enjoyed record volumes in its grocery and consumer arm, as well as being boosted by new contracts with the defence contractors BAE Systems and Alstom. Now, an estimated $500 billion has been wiped from the value of the global cryptocurrency market this month, following a sharp decline in the so-called stablecoin Terra USD. It has reignited the debate over the future of crypto at a time when exchanges, banks and institutional investors were starting to become more interested in it as an asset class. Well, my next guest, though, argues that cryptocurrencies offer few meaningful opportunities for institutional investors. Taima Hyatt is the Chief Operating Officer at the global investment management firm PGIM. Taima, welcome to you. Why do you say this?
Good morning, Ian. Basically, we looked at the data. We tried to torture it as much as possible to see if there was a case for cryptocurrency for long-term institutional investors. And while I think the first 7 years of Bitcoin were momentous, when you look at it, it's a teenager now, by the way, 2009, when the first Bitcoin transaction happened. For the last 4 or 5 years, Ian, the data just shows that it no longer acts as a diversifier to equities or bonds. It's not a safe haven. It actually cratered during the Ukraine war, and it hasn't done well against the current bout of inflation, 9% in the UK that we're seeing. It doesn't have a stable relationship with other asset classes. It has terrible ESG characteristics, not just on the environmental side, but also on the governance side. And its risk return recently hasn't looked that much better since the pandemic versus many other asset classes. So the data just doesn't allow us to see a reason institutional investors should be in cryptocurrencies.
I mean, one of the main cases made for cryptos like Bitcoin is that it is a reliable store of value. You're arguing that's not the case.
I think it doesn't fulfill any of the functions of a currency, one of which is to be a reliable store of value. I mean, you could go with your Bitcoin, Ian, one day and pay 3 times a higher amount for a cup of coffee. So it hasn't really worked yet as a store of value. It really hasn't worked yet as a broad medium of exchange. We don't think it's going to replace fiat currencies like the sterling or the euro. In fact, we think those currencies will learn from Bitcoin and the innovation system around it. And central bank digital currencies, the digital euro, the digital pound, will actually become quite important, but not cryptocurrencies themselves. And I think the final headwind there is the regulatory environment is really uncertain. There are lots of headwinds. The recent stablecoin example you cited will worsen those headwinds. And I think institutional investors are looking for stability and clarity in the regulatory framework before they jump in at any scale.
Supporters of crypto would say, well, it does actually display a lot of the characteristics of a store of value. I mean, it's limited supply, it's fungible, it's transferable.
I think when something loses 35% of its value since its peak, as we're seeing recently, for no apparent reason, it's quite hard to make that claim when you take a cold, hard look at the data, Ian. But what I would say to the crypto enthusiasts is that we actually at PGIM, across our 1.5 trillion of assets, see a lot of opportunity in the broader crypto ecosystem. So that sort of implicit innovation that happened in the blockchain creates a range of investment opportunities that we think are quite attractive for long-term investors.
Absolutely. We'll get on to that in a moment. I just want to press this point, though, on Bitcoin and other cryptos being an inflation hedge. Worth pointing out that since the 21st of January, which was when a lot of turbulence started to materialize, Bitcoin has actually marginally outperformed gold.
It has, but I think there are two other things to look at as well. One, the only recent bout of inflation we've had in the G8 has been over the last year and a half or so on. And Bitcoin has actually lost value over that period. And second, if you look at a 10-year period, gold shows much more stability than Bitcoin has. And if you want an inflation hedge, I think some of the classic hedges that have intrinsic economic reason to act as a hedge, real estate would be a good example, or even gold that has intrinsic value because 50% of it is used for industrial uses, and jewelry, it's still held by monetary authorities, I think has a better underlying economic case than Bitcoin, which really, where's inflation now? 9% in the UK, over 7% in the US. Look where the cryptocurrencies are. They really haven't held their own.
And just to go back to something that you said a moment ago, you aren't saying that there's no value in some of the technology in the crypto ecosystem, distributed ledger technology, for example.
We actually believe there's lots more value. It's like during the gold rush, value wasn't ultimately in people who held gold for a long period. It was in the shovels and picks. So we think blockchain is powerful, and specifically the real world use cases. Investors shouldn't get caught up in some of the sort of fantasy use cases, but they're real world use cases. I would say, Ian, the strongest ones are in permissioned blockchains, private blockchains in financial services. They're going to be quite revolutionary in supply chains and logistics. There are real opportunities in smart contracts that make escrow and repo markets much more effective and quick and cheaper. There are real opportunities in tokenization, so securitization of real estate and infrastructure in a way that many more retail and broadly more diversified investors can come in. And I do think that parts of the metaverse, I mean, it is 500 billion in revenue now in e-gaming, in esports, in advertising. There are opportunities there. There are lots of losers, lots of pitfalls, but there are absolutely opportunities, and investors should keep a close eye on the broader metaverse, but not in NFTs, and for institutional long-term investors, not in cryptocurrencies.
All right, Taimo, we have to leave it there. I always enjoy having you on the programme, and I'm going to get a proper intellectual discussion. Good to see you again. Thank you.
Thank you.
Well, still to come here on Ian King Live. We'll have a look at how global markets are doing this Friday morning. Don't go away.
And now it's coming from both sides, and it's moving this way.
Only about half a mile from the Turkish coast, and it's evident that the boat seriously overcrowded. This is one of the most severe viruses in the world. I'm Alex Crawford, and I'm Sky's special correspondent based in Istanbul.
The biggest party Tripoli has ever seen.
That's it, it got us then. There's a lot of action going on, a lot of hits going in still. We aim to be the best and the most trusted place in news.
Clearly not had very much to eat at all, a lot of them extremely thin and very frail. Look at her arms, I can put my entire hand round.
This is the cocktail of drugs which the doctors at this hospital have been giving their coronavirus patients. Made for people who want clarity in an uncertain world.
Mother Nature can be vicious, absolutely savage. The world's largest falls now down to a trickle in places.
I can't imagine
How much plastic is lying at the bottom of this huge lake? Whoa!
Close and personal with a rhino.
This is what makes the job so fantastic.
Well, despite another brutal session on Wall Street last night with the S&P 500 on the verge of bear market territory, stocks in the Asia-Pacific region ended the week on a positive note as the People's Bank of China cut one of its main interest rates. Hong Kong finished up by more than 3%, while Mumbai finished up by more than 2%, while Tokyo, Sydney and Shanghai were all ahead by more than 1%. Well, stocks in Europe are also heading into the weekend on a positive note. Not sure whether I can show you the movements. They are, all of them in positive territory. They're up by between 1% and 2% right now. The MIB in Milan, the Starr performer, up by just shy of 2%. Their talking points in Europe this morning include Richemont, the Swiss luxury goods group whose brands include Cartier. The shares there are down 9% in Zurich after a downbeat trading statement. Well, here in London, the FTSE 100 is also sharply in positive territory, up nearly 2% there in a broad-based rally. Royal Mail, which was the biggest faller on Thursday, is the biggest percentage gainer today, or one of them, up by nearly 4.75% right now. Look at that, Prudential at the top of the screen, very heavily exposed to the Chinese insurance market. The shares are up 6% there. Outside the FTSE, the Hut Group, THG, well, it's surged by 25% this morning. That's on news not only from the entrepreneur Nick Candy, but also another bidder whose £1.70p a share offer was turned down last night by the e-commerce group. I don't think we can show that. I can tell you the shares are currently around £1.45p last I looked before coming into the studio. Well, on the FX markets, the dollar looks set for its first weekly decline in 7 weeks. Sterling right now up by 0.1% against the greenback, completely unmoved against the euro right now. Quite somnambulant this morning, sterling. As for the oil price, well, that is slightly lower this morning. It's been trading in a very tight range over the last 24 hours or so. A barrel of Brent crude currently changing hands at $111.91 a barrel. That is down by 0.1%. Brent crude there on Nelson for all of you cricket fans out there. Well, joining me now is Victoria Scholar. She's Head of Investment at Interactive Investor. Victoria, welcome to you. I mean, this Richemont statement was quite a surprise. I mean, all the luxury goods companies lately, their trading updates have been really very positive.
Yeah, I mean, we saw Richemont down double digits, but it's not so much about the numbers. It's more about this plan to sell a majority stake of its online retail business, Yoox Net-a-Porter, to Farfetch. We were expecting an update this morning on that. These talks have been dragging on since last year, and those haven't materialized. So this big drop that we're seeing isn't so much about the figures. We saw net profit up about 60%, for example. We saw huge jumps in terms of watch sales, up about 50%, and other luxury goods as well, like jewelry, up around 50% as well. It's the fact that this deal hasn't materialized, and that's why investors are getting a bit impatient and bored of these talks dragging on and on.
Good, thanks for clearing that up. Now, what did you make of the retail sales figures here in the UK today? I mean, the market was looking for a modest decline. We got a big jump.
Yeah, I mean, it's interesting because we saw that unexpected rise of 1.4% in April, which was, like you say, ahead of expectations and bouncing back after 2 months of declines. But actually, if you look at the figures on a quarterly basis, they're still in decline. They've been declining since last summer. We can account for some of the pickup this month based on